Hi guys, how are you? My name is Titanium, founder of Investing MMT and co-founder of Pure MMT for the 100% Beyond the Memes, along with my friend Edward Delzio, who is the author of The National Debit. And I also run a Patreon page at patreon.com/mindthisone for $5 a month. And that's where I teach everybody how to understand modern money, how to understand macroeconomics, how to apply that into the real world and into investing. So if this is something that you're interested in, come on down and I'll be more than happy to share my knowledge with you. Now we're going to continue with Bitcoin because I think it's a very interesting chart. I think it behaves very nicely, and I personally don't care about Bitcoin. I think I think it's crap, but doesn't mean you can't make money off of it. And let's get started. Okay, before I continue with the video, I'm going to take you back to December 25th, which was Christmas Day. And I made this video and trying to explain to everyone how price and charting behaves. So let's listen and see how I was forecasting what the future might look like in Bitcoin. So let's get started. This is what is considered a stage 3 uptrend. Okay, so you had this uptrend here, then it accelerated, and then it accelerated again. This is right in here. This is stage 3. Usually stage 3s are ending. Okay, they're the last stage before they start to reverse. Now, what we are looking for is this. If the price action continues to come down and test this area, this will become a very good risk reward. Because remember, we are looking for that one more move up. That's going to be a lower low. Come back down, break the previous low. Okay? And it would look like this. And then the whole thing falls apart. Okay? Okay, so let's compare this to what we have today. Voila. You see it? This is exactly what it did. It's almost identical. From this to this structure. Okay? So clearly you can see what I was forecasting based on understanding of charting. So I also made a video. Now, to be fair, I thought that the price action would come down a little further and then bounce. Okay, doesn't matter that it did it from here and bounced. That it's inconsequential. But let's look at this piece here and how I analyzed this. So here's a video from January 1st, 2018, and as I'm showing in the video, that if this were to turn out to be a 1, 2, 3 and it breaks this structure, then the whole thing falls apart. Okay, and then I pick it up from there and I'm saying, okay, well, if it's going to be bullish, then this is what it's going to kind of look like. It will break out. Let's just watch the video and you can see it for yourself. If you're going to be on the bullish side, then the way I would probably handle it is like this: that take my profits, thank you very much, sayonara, bye bye, okay, and put a buy order up here, okay, because if it breaks out, then you can participate in it because it's going to go to the moon. It's not going to stop. Okay, it can go 40, 50, 60,000, whatever. And I'll give you a couple of examples. This is the first example. See it back here? Right? It did whatever it did, and then it broke out. Off to the moon it went. See what I'm saying? Okay, so this was the bullish scenario. And remember, I'm not... I don't have a crystal ball. I don't know what's going to happen. I can tell you what scenarios are and how to react and where to take the least risk, maximum reward trades. Okay, so I said, if I was in here, I would sell it and then just put a buy order up here. If it comes up here, then it's gonna shoot up. Right? Very logical. No need to take all this risk in here if it continues to fall apart. But if you are right and it's going to start going higher, then you should buy up here. And then you're not participating, so if it falls apart, you don't lose your ass. And if you give me an argument, well, I don't want to give up $1,500, $1,500 or whatever, well, then you're just a degenerate gambler worse than the other degenerate gamblers, So this was a bullish scenario, and the reason it was bullish scenario because price action always moves counter to what the move is going to be, usually. And again, if this is what the chart looks like, if you would have listened to what I said, then you would have put your buy order somewhere in here, and now you've captured this whole move, all right, which is about $2,000-$3,000. No risk of this falling apart, maximum gain. It's just the way it works. Let's continue with the next video that I did and see what I told you. Okay, and this is the video that I did on January 2nd, the very next day, and I came out and I said, oh look, you know, it made the move, right? The thrust up move, it broke the structure that is typically bearish, but except for the fact it hasn't completed, but more or less it did break the resistance area. And let's see what I said in this video. If you took my advice and you thought it was correct, where you should just take your profits somewhere in here, okay, and then place a buy up here somewhere where it breaks the structure, if you did that, it's very simple. As long as price does not come back into the structure, let it go. Okay, let it go. If it does fall back into the structure, you got to stop out again, unfortunately. Okay, and then you have to buy it again if it breaks out of the structure. You see, you never know when a thrust up move is going to end. You have no idea. Nobody can tell you when this is going to end. So we don't know if this is a breakout or if this is just a small range expansion, okay, of the structure, or a bigger range expansion of the structure. We don't know. You see, so that's why it would have been actually a lot more bullish if it would have just came a little further down and then bounced. That would have been such a easy trade to take. But that's not what happened. That's not what it's forming. So as I told you before, that this was a bullish structure, right? It's always deking. It's showing you one way and then it goes the other. You know, more often than not, that's what it does. Okay, but the problem now is that you're getting another bearish structure. If this is correct, and you get a 1, 2, 3 up, then this is bearish. So, not very clear. Need a little bit more clarity, more information to try to figure all this out. Let me show you another example. And if you're not understanding this, don't worry about it. You can come down to Patreon and join me, and you'll learn what all this means by my subs. Okay, I fast forward the video a little bit, so let's continue. So again, be very cautious. Very cautious. Don't let it come back into structure. Okay, as long as it doesn't come back into structure, even if it comes down. Okay, even if he starts doing one of these jobs like this. Okay, as long as it doesn't come back in structure, you're good to go. You're still upside. In fact, this will be bullish. Remember, anything that's pointing one direction, it does the opposite. And then that would become 1, 2, 3 up. Okay, but again, it's going to be... Okay, so this is what I said could happen. Okay, and I told you where the risk reward was. And I told you this was bullish. And let's see what happened. Voila. You see? Pure fucking magic. PFM. That's what I call it. So, you know, we started the analysis all the way back here from this, you know, what I call a limp dick formation. And then we were expecting upside. We got the upside. We got the broken structure. We got the consolidation. And then we got the breakout. Okay? Now, the problem is that we are going into a structure that is going to be bearish looking. Okay? Doesn't mean that it cannot continue all the way up. But this structure, if it comes all the way to the top, it's going to be a lower low. It's still going to be that M pattern, right? This is the thing. M pattern, and then it falls apart. Okay? So, it is very also possible, because again, we never know when a wave is going to end. We have no clue. It could be one more up like this, and then it falls apart. We don't know. But the closer we start getting to this area, the more you want to be thinking about taking profits, okay? Because very easily, this could be the end. Let's just pretend for now that the wave has ended, and now we have this structure. That's going to look like something like this. And now what? Well, just like this was bullish, this is bearish. Okay? So be very cautious. The thing about waves is that they give you a structure. All waves give you a structure if you just wait long enough and let the information tell you what's going on instead of you telling the information what's going on. Okay? Investing and trading, charting is not about what you think. It's not about guessing better than the other guy. Okay? It never is. So, if this starts to break down, then I would definitely, be very concerned about more downside. Okay? If it comes to the bottom and has some kind of structure like this, then you can look for one more wave up. Okay? And then you want to buy here with a stop if it breaks the support area. When you start getting into these smaller time frame trades, you're saying, okay, I have, I don't know, a couple $100 of risk versus $1,000 of reward, and you're starting to micromanage it a little bit too much for me, personally. Okay, doesn't mean that you can't take a little baby trade or something, but don't go balls deep, and it's like going to the casino and saying, okay, I'm going to put a quarter in, see what happens. So just think of it like that. But over the bigger picture, at some point this is going to end. We don't know where. All right, maybe it's up here, and then we can just adjust the line. Is it here? Is it here? Is it like this? Is it like that? We don't know. At some point it will roll over. Okay, and you definitely want to be out of the trade. But once again, I will caution you that this thrust down move, this is a 1, okay? We don't have a 3-wave down. You need a 3-wave down, no matter what, okay? In your head. If it never does it, then whatever we're looking at is completely wrong, and that's just the way it is. But usually, like I've shown you before, you're always going to get 3 waves at the bare minimum. So, if it's not doing something that you're expecting, then you shouldn't be involved at all. So for now, we'll go back to just leaving it the way it is. Let's see this structure start to break down. The target will still be to the top somewhere up here, where I guess $18,000 and $19,000, somewhere in there. Okay, and let's see how it behaves once it gets up here. If it starts to break down from this structure, then we can start getting cautious again and looking for the next move down. That's it for now. I hope you enjoyed this video. I hope you enjoyed the analysis that I've been giving you over the past several weeks. Remember, if you want to learn more about bare knuckle charting, which is what I do, come on down. It's $5 a month. Believe me, I'm not making money off $5. Mostly it's to keep the trolls out. Okay, so come down, $5 a month. Join us at patreon.com/mindthisone, and you'll get free access in real time on Facebook Messenger. You can join our group. There's a lot of older traders there that have been doing bare knuckle charting for a while now, and they will be more than happy to help you. And join us and like us on IMMT and Pure MMT for the 100%. Don't forget to buy the book, The National Debit. It's a great book to start to understand how modern money actually works and not how most people pretend it works, including politicians. Thank you. Have a great weekend, and I'll talk to you soon. Bye-bye.